The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem.
Big run up in prices after that sell-off. So joining us now to discuss the crypto markets is Matthew Sigel, head of digital assets research at ETF mutual fund manager VanEck. Welcome, Matthew.
Morning, folks.
Hi. So yeah, as we discussed earlier, we had this rebound in prices a little bit after breaking in the high 30s, 38 and change. What exactly caused that sell-off? What do you suspect caused that rebound? And what do you make of the fact that we're kind of been in a range really since January?
Well, happy day after tax day, everyone. And I think that has something to do with it, which is putting our, substantial tax liabilities behind us and looking forward to having a little more money to buy crypto every day with. And that's some of it. I think some of it is also some positive earnings. Silvergate reported Bitcoin-backed loans for Silvergate are up 75% in the quarter. They added more institutional customers in Q1 than they did in Q4, despite crypto prices down sharply. Credit quality looked excellent, 0% net charge-offs, NIMs rose. So those stocks, Silvergate and Signature, I think will help a little bit. Big fundraising in the space, Sandbox, raising a couple $100 million at a big valuation from SoftBank. That should be supportive. A deal in India as well. So I think it's just putting yesterday's volatility behind us and a bit of a bounce. But the market continues to be concerned, I would say, about the high levels of correlations with equities, with kind of flip-flopping by Fed policymakers. So, yeah, we'll see.
I think, the big question that everybody's been asking is, what's it going to take for Bitcoin to really break through to the next level, which I guess would be, above 50,000. What's your take? What is there any sort of macro development or event that would likely propel Bitcoin to that level?
Over the short term, I think it will depend on the kind of growth versus value equities ratio. Bitcoin, especially the non-Bitcoin part of the market, the smart contract platforms have had quite high correlations with tech stocks, which themselves are responding to really Fed policy. So, we're looking for that first liftoff, a little more comfort for the market around the pace of the rate hikes going forward. And, as equities participants take a more balanced approach towards growth versus value, that should support Bitcoin and crypto. But longer term, I think what's happening is institutional and sovereign adoption continues to grow, and we're seeing the hash rate, making all-time highs nearly every day. It's bad for Bitcoin miners who are, splitting that hash more widely, but for the ecosystem generally, we're seeing bigger participants, and that has the effect of lowering relative volatility, and that's a trend that we continue to see is relative volatility falling versus NASDAQ.
Speaking of adoption, Australia is going to be the 8th country to approve a Spot Bitcoin ETF that'll launch on April 27th. And there are rumors that VanEck may launch something too. Maybe you could comment on this growing, adoption of Bitcoin spot ETFs and any possible announcements by VanEck.
We continue to think that there is, huge demand for a spot Bitcoin ETF. It is confusing and outrageous that the U.S. has yet to approve one. Our application remains pending. We're interested in other markets as well. So, you've seen VanEck consistently be a first mover and aggressive in trying to bring these Bitcoin ETFs to market, but really they've become a sideshow. And because of the limitations that we have in the U.S. part of our business, not being able to bring these listed funds with the most liquidity at the lowest cost to clients, we've been pivoting and introducing private funds, and it's a pity that it's institutional investors and accredited investors who are getting access to these products. But we're going to go where we're forced to from the regulators, and that's more towards private funds. Should note though that in the EU, VanEck now has more than 10 crypto ETNs trading. We recently launched a basket, VanEck crypto top ETF. That's a basket of the top 5 coins. So, where the regulator permits it, you'll see us on the front foot.
So Matthew, we as we discussed at the top of the hour, we were the U.S. government is obviously concerned about North Korean involvement in the crypto markets to some extent, and it could have it could be an explanation as to why they are reluctant to approve a spot ETF. What do you think would allay their concerns about North Korea's involvement in the crypto markets in general, particularly the potential for manipulation of prices, et cetera? What could VanEck and other ETF providers do to allay regulators' concerns about this?
I think we have to separate what regulators want what jurisdiction. And when it comes to the ETF issue, the SEC wants oversight into spot trading. They want to oversee these spot exchanges. They have not been able to gain that jurisdiction. And until they do, they're holding the Bitcoin ETF hostage. That's a slightly separate situation from, the North Korea, fears about money laundering, where it's more the Treasury Department and international organizations looking to enforce sanctions through bank secrecy acts, et cetera. I think the two are not totally related, even though, in the news flow, they may get conflated.
Switching to the alts, I wonder what you're looking at, what you're interested in. We are seeing news today that Terra's Luna has been surging 17% as UST, their native stablecoin, becomes the 3rd largest stablecoin out there. It's an algorithmic stablecoin. So I'm just wondering, what are you looking at and your thoughts on this Terra Luna ecosystem?
Yeah, so we kind of break the crypto universe into 8 different categories, 4 of them being, particularly investable, smart contract platforms, DeFi, metaverse, and infrastructure applications. So within the smart contract platforms, protocols like Ethereum, Solana, Avalanche, Luna, that's the sector of the market that has really outperformed over the last year with lower levels of valuation lower levels of volatility. And we saw that reverse somewhat at the beginning of this year. DeFi coins started to outperform. They're much cheaper on price to sales. There were a number of catalysts to unlock value, activist investment proposals, M&A. But what we see as time progresses is that it's really the smart contract platforms that continue to outperform with lower levels of volatility. So the index that we have that tracks that, and the private fund on top of it, we own most of those top layer 1 coins. We've been buyers of Luna recently, encouraged by the diversification that they've done to bring Bitcoin as a reserve asset into that ecosystem, and some of the applications being built on top of it look compelling also. So it looks like 2022 is going to be the years when really well-funded protocols push their advantage to gain market share during this bear market. And that's usually what we see happen, is that the big get bigger in bear markets as they press their funding advantage. And that's kind of what's happening with Luna and this new 4-pool. Frax getting involved. Luna now, the biggest buyer of Convex as well. So you're really starting to see, I think, a collaboration and alliances being formed in these layer 1s that should make the winners stronger over time. And that's really what we're betting on, is kind of the top 6 to 8 layer 1 coins continue to gain market share over the course of this year.
So Matthew, what do you say to people who are concerned about Luna's strength based on essentially unsustainable yields of like close to 20%, that this has the hallmarks of something that could eventually collapse on itself and even take other coins with it? What do you obviously you guys are buyers of it, so you're long. So what's the counter argument to that?
I guess the counter argument is that the thing that everyone is usually focused on isn't usually the thing that blows up. So we think there is going to be a successful algorithmic stablecoin industry. In order to succeed, Do Kwon and Terra are going to have to be very nimble and flexible, changing the monetary policy as needed. I think they've been very transparent that the anchor yields are unsustainable and will come down. And the market has taken heart from that. So, some of those yield declines are already in the price.